Hello world, Tim Knight here, Slope of Hope, with a shorter video than usual. I just want to talk about the market in general and talk about some trading rules. This is the ES ending around July 21, and I bring this up only to show that it was really quite impossible to anticipate the kind of drop we were going to see in the couple of weeks that followed this. Really the only thing that I saw here was an approach toward resistance. And we had a series of lower highs, although nothing dramatic. I mean, really, we've only had 2 touch points here to work with. So the fact it was reapproaching this, it's not like there was this series of a dozen beforehand. So not the strongest trend line in the world, but worth observing. And a bull might have plausibly argued about a very handsome cup with a handle pattern here, although it is sort of tilted down. But you know, the risk of this bursting above 1350 and zooming higher was definitely there. We know what happened now with the benefit of hindsight, that it did indeed touch that trend line and did nothing but fall afterwards. I mean, goodness gracious, this is just breathtaking. And this is kind of how these waterfall declines go. They just accelerate, which is really, really exciting. The acceleration has prompted me to update my rules list, which I'll get to in a minute or two. But yeah, we lost like 200 and, well, nearly 300 ES points in the span of really just a couple of weeks. A couple of thousand plus Dow points is really astonishing. And as I said yesterday, I had gotten out of all my shorts, which is really extraordinary for me, and went long. And the market kept falling last night, and I was a little worried because I was, not long in a big way, but I had a couple of medium-sized ETF longs, IWM and XLI, and the market just kept falling last night. When I woke up this morning, the market was strong. And it really had a lot of weird monkey business today. So, went to bed, it was down, got up, and it had zoomed in the night and then go down and kind of zoomed again. And so I was pretty pleased with that. And then the Fed came out and did their thing, and it really just collapsed. And you can't see it here, but with like the IWM and SPY, it actually cracked the prior lows, so it looked really distressing, like the counter-trend rally was over, which is a little preposterous. How could it have lasted hours? And then, for whatever reason, same Fed announcement. I mean, nothing had changed. Then the market decided to zoom higher again in a really explosive rally. And so I am and remain net long. I have a handful of carefully selected shorts. But the longs definitely dwarf the size of the short positions. And here we are after hours, and we've inched up a bit more. It's up, as I'm recording this in the evening, it's up about 1/3% past even the Hardy rally. But you can see here that the market has a pretty tough hoe to row here, because this is a very dramatic collapse. There's a lot of buyers that are going to sell into any rise. But I will be most comfortable with a S&P reapproaching the 1300 level. Let's call it a 1250 to 1300 range. 1250 represents a pretty meaningful level of resistance, but given enough reasons, and golly gee whiz, here's the end of August, which is Jackson Hole time, that would provide the interesting fodder to goose this up. Approaching this broken trend line would be tantalizing. I mean, wow. And I'm sorry, I'm going to repeat this probably 300 times in the next few weeks. I want to be 200% short this market. I've got nearly 300 different stocks that I'm eager to short. If we get back to this level, 1250 to 1300, this area here, I'm doing it. I'm going all in. And it has been forever since I've been all in to anything. Seriously, the last time I was really, really short was an entire year ago. And that was the whole Jackson Hole debacle. So bad memories there. But in my opinion, the market has really tipped its hand in terms of its potential weakness, and a push back to that level, for whatever reason, would be a glorious shorting opportunity. But that's the future. This is now, and I'm primarily long, and that's that. Now, as far as the rules go, you know, as I hope you know, there's this menu at the top of the blog, and there's this trading rules page. And there's by way of analog, George Carlin has a great routine about the 10 Commandments. You can go to YouTube and just type George Carlin 10 Commandments, and it's funny. You should watch it. But he basically takes all 10 and boils them down to 2 essential ones, which is basically be faithful to your spouse and don't kill anyone. And it's a funny but smart routine. And by the same token, I actually had 7 rules, and most people add rules and add rules and add rules because they keep having experiences which compels them to add rules because they screw up and come up with another rule. I really not only wanted to avoid that, I did the opposite. I nuked a couple of rules. So I went from 7 to 5. The rules I got rid of, one was about balance. It was called breaks. It basically said to hold ETF positions contrary to your other holdings when you feel there's a short-term correction. That hasn't been useful to me at all, and I think that it just wasn't really a rule that anybody could use. It wasn't really applicable to anything. So I got rid of it. And the other one had to do, it was just called freshness, and I folded that notion into the stops rule, because the point of that rule was just to keep your stops fresh, and there's no reason for a separate rule about that. So it's down to 5, and you probably have good reading skills, so I'm not going to read them out loud to you. But I will read out loud one of them, just because it's one I've kind of wordsmithed all of these, but this one in particular, on the stops, I definitely changed. So a stop price must be in place at all times for all positions, and stops should be set, and here we go, generously enough so as not to exit a position prematurely. And here's the important new sentence. Prices on properly performing instruments, that is, things that are going your way, because if they're not, you'll get stopped out anyway, often move farther in your direction than you can anticipate. So I have probably left a lot more money on the table in my trading life than I have lost. In other words, the net losses are really in the realm of abandoning positions prematurely as opposed to just straight up losing money on bad trades. And that was definitely true in this most recent experience. I made money during the fall. I was short during the fall, and that was lovely. But a very meaningful percentage of the potential profit were forsaken simply because I kept worrying about a reversal, and the stops were just way too tight. And as I pointed out earlier, once the fall started, it went faster and faster and faster and faster and deeper. And so positions on which I took, say, 15% profits blossomed into like 60 and 70% profits. So a profit's nice, but when you're leaving that much on the table, it sort of takes the whole point out of it, because falls like this don't happen very often. And when they do, you want to be there to take advantage of them. By the same token, dramatic rises, like today's, don't happen very often. So you want to take full advantage of them too. So as a concrete right now example, I've got nice profits on my long positions. The easy thing to do would be to say, gosh, it's going to be so hard to get through here. I'll just take the profits now. In actual fact, it probably is going to just keep mustering higher. And, why abandon the position? What if we fall 10 or 15 ES points tomorrow? Well, that's just part of the whole backing and filling process. So the point is that instead of setting a stop like really tight, like right here, maybe set it really generously, like way down here. There's a lot more risk to that, but the fact is that if it goes down and then shoots up again, you'll still be in position. So I'm going to give them more room to run. Okay, that's it for tonight. I'm going to sign off and I'll see you in the morning. Oh, and I said I wouldn't do this anymore, but any video, I'm still going to mention, click an ad. Thanks.